Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, August 6th, 5:18 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida with The Big Show. You know if it's me and it's Friday, it's The Big Show, the expanded edition of the Revere Market Insight video where we take a look back at the prior week, take a look ahead at what you need to know for next week, and update the world famous 21 over 21 leaders list. Let's get right to it. State of the market. We remain in an uptrend with small caps lagging, but based on some economic news we got before the open, if banks and oils continue to be strong, we'll be crossing this small cap fly in the ointment off of our market state in short order, and we'll take a look at that in just a moment. If you take a look over here at the trend gauge, market leaders still strong, still bullish. Great week for market leaders today. Really a control pullback across the board after some nice outperformance earlier in the week. Short term, using our 21-day moving average and comparing the 5 major indexes to it, we are in a bullish uptrend. The little yellow arrow pointing toward neutral just signifies the weakness in the small caps as they can't get a sustained move above their 21 or their medium-term 50-day moving average. Same situation there. Longer term, we've been in an uptrend since, well, for over a year now, since July 24th of last year. So that's how we roll at Revere here. We track what's going on in the market across 3 time frames, and we track leaders separately. Depends on what's going on in the market. It dictates our exposure to the market and what sectors we're invested in. So what happened today? As I kind of alluded to, tech pulls back on jobs report. So the jobs report came out strong. Earlier in the week, one of the Fed heads said if we get back-to-back job reports near 1 million, I think we can talk about tapering. So 900 and some thousand jobs beat the estimate. So maybe that knocked down one of the pins that needs to be knocked down before the Fed talks about pulling back the punch bowl. Anyway, at any rate, as soon as it came out, rates ticked up and tech ticked down. Tech well off the lows by the end of the day, and we saw rotation into oils, banks, and cyclicals. And here's how we ended up across the board. S&P up 0.17, the Q's down 0.4%, Dow up 0.4, mid caps up 0.4, and Russell 2000 up 0.5. Let's take a look at sectors and how we rotated. But first, let's take a look at the people running the show here at Revere. If you're interested in an investment advisor, active management, think about this. This is the analogy I always like to use. What part of your life where when things start going south do you not take an active role in? If your car's check engine soon light comes on, do you just ignore it and think, it'll get better? If you're headed out and it looks like it's going to rain, do you not take an umbrella with you or dress appropriately? We believe as technicians that your portfolio should be treated the same way. So we monitor it. When things are fine, we want to have as much money invested in the leading stocks and the leading sectors as possible. But there are, long-term, the market has trended higher throughout history, but that long-term is filled with a bunch of short and intermediate term severe pullbacks, including some of 40-50%, that can really be devastating to your portfolio. We would rather see when this is coming, get out of the way, wait till the smoke clears, and then get back into the market. That way you are compounding your capital from a higher base than if you rode out, for example, the 34% 5-week COVID pullback. We were out that year. We never even went down double digits during the COVID period. So we're compounding from, if you had started with a $100,000 account, we're compounding from $90,000 People that got a full pullback in COVID are starting the way back up from 66,000. So big difference there. That's the way we approach it. And if you're interested in this approach, give us a shout. Dan is the majority partner and our chief compliance officer, and he's a CFA and the most knowledgeable in all matters financial of the entire staff. Really, I consider myself fortunate to be working with him and a partner to him. And if you reach out, if you call the phone number, you'll probably get him, or you can email him at dan@revereasset.com. You dial the phone, you might get Muriel on the other end too. She's our office manager and really keeps everybody straight, handles most of the onboarding like a true professional. And you can reach her at Muriel@revereasset.com if you have any questions about that process, or you can email any of the technicians that are on staff, Tim, Hunter, Alex, or Don at revereasset.com. The phone number is 855-REAL-WEALTH. That's 855-732-5932. Let's take a look at a couple of quick secondary indicators that are contrarian bullish. The Fear and Greed Index, markets are near all-time highs, but we're still showing fear in the market. This at a 35, that's a contrarian bullish signal. Let's take a look at the NASI McClellan Summation Index. This is a sign of risk on, risk off on the Nasdaq. A little hook up on Thursday. I'm expecting a further hookup on Friday, and we're also getting a MACD cross to the upside here. If this comes off of oversold and starts heading up higher, small caps could lead the market to another leg up. That's something we're definitely keeping an eye on. And as far as lack of fear in the market, that's just not the case. Here's the CBO put call ratio. We closed the day today above 0.9, and that again, you don't want to see an overly low put call ratio. So there is some fear in the market. That fear, no doubt, brought on by the good jobs report and the thought that the Fed might pull back the punch bowl. So we'll see how things play out. As always, we take our lead from the price and volume action in the markets, in the leading sectors and the leading stocks within those sectors. So let's take a look at the S&P 500 here. You can see all-time highs. Those are not bearish, folks. We just continue to ride this trend higher. We had a harsh pullback, but bounced off the 50-day moving average. This is 1, 2, 3, 4, 5, 6 times going back to January of this year. Barely closed below it here, barely closed below it there. All these closed below it there. These are one-day undercuts, and then the market says, hey, the Fed's got an easy accommodative money policy. Why don't we invest in stocks since we can't get any return anywhere else? And the market just bounces off these levels and continues to go higher and making all-time highs here. Earlier in the week, we had a pullback, bounced off the 21-day moving average, just like we want to see. That's this green line here. And nice last couple of days. Let's go to the Nasdaq 100. This index leads up and it leads down, and you can see the relative strength, kind of jagged but trending higher over the last 6-7 weeks. Really, if you go all the way back here, we had a period, well, we had several periods, one in February, March, where we had a very harsh pullback, another pullback here in May. But then when we bottomed May 14th, this is the particular day, 519, where we gapped down, closed at the high of the range, and really haven't looked back since then. This was a very pivotal day, an inflection point, if you would, and we've been, for the most part, heavy in the market ever since. 6-4 was when we went back, we upgraded the leaders section of the trend gauge after this pullback and bounce off of it, and we've been riding these markets higher. So Nasdaq 100 looking fine, made all-time highs yesterday, and then, as I mentioned, a pullback today, but a constructive pullback, no damage done to the action of leading. Not to say some individual stocks are not breaking down. They are, based on some earnings reports primarily, but the way the leaders are acting is where we want to focus, and the pullbacks in them today didn't cause us to sell anything. So we're fine there. How about the Dow Jones Industrial Average? If cyclicals take a step to the front, you'll see the Dow start to lead again. Here's the Dow closing at all-time highs, finally breaking above this 35 to 35.1 area that has been acting as resistance, going all the way back here to May. So really, I mean, this is a breakout, plain and simple. When you break out of a range that you haven't been able to, it's a breakout. So let's see if it holds. And if we pull back, we want to see it contained by the 21-day exponential moving average, just like we were this week when we pulled back on Tuesday but closed at the high of the range. Tried to give it back on Wednesday, held the 21, and then Thursday and Friday, nice recovery for industrials this week. How about mid caps? Mid-caps finally getting above their 21 and 50-day moving average as we continue in this flat base, which is 68 days long now. So that's 138, 17, 18 weeks long. Break above, not to new all-time highs, but it's good to see relative strength over the last week and a half in mid-caps. We'll see what comes up next week. And now finally the last fly in the ointment, small caps. Got above the 21. Look at that. That's two closes above the 21. Can't pierce the 50. We've tapped on it 4 times over the last week and a half. Let's see what happens next week. And like I said, if money starts flowing into cyclicals, that includes oils and banks, which are a big part of the small caps. And this could lead another leg higher. As you can see, we've got room to run based on that Nasdaq McClellan Summation Index that we looked at. Let's break it down into sectors now and see what did well and what did poorly on the week. Bear with me for 1 second. Let me shrink this back down and then bring up the 6 sectors. Sorry, the 11 sectors, so I can step through them. So let's start off basic materials here. You can see the relative strength today and a change in trend. Look at the slope of the 21-day moving average. That changed and started trending back up about a week and a half ago, and we got back above the 50-day moving average today. Big strength in basic materials last week on a relative basis. Pull back the beginning of the week, strong to close the week. So this is definitely an area we're looking at, and we took a position in Steel Dynamics today to take advantage of this. And we also added Franco-Nevada last week, and Albemarle, ALB, has been in the 2121 list for quite a few weeks. Unfortunately, we haven't owned it, but the 2121 list is an indication of what sectors and what stocks are acting well above the 21, and we'll take a look at that momentarily. So XLB, next up is XLE. And energy, at least on a relative basis, it looks like it stopped going down over the last 3 weeks. That's about the best I can say about it. Unable to get over the 21-day exponential moving average. You can see how that's been acting as resistance here. I can really only find one energy stock that gives me any interest whatsoever, and that's Chesapeake Energy, who really just came out of bankruptcy. So, but at least they're forming a base. Most stocks are in the energy group are trending below their 50 and their 21-day exponential moving average. So let's see what happens next week and see if any energy stocks can get a bid. Communications services has trended for the most part lower over the last couple of weeks, but all that is a pullback. They're still trending higher over the 21 and the 50-day. Financials, here's the big bump. Started to trend higher last week and a big move up over the last couple of days, including today. You see the gap up there. Now, will we need to fill this gap? Was the move in interest rates today higher just a one-day wonder? We don't predict. We observe, interpret, and react. Let's look at the TNX very quickly. This is the 10-year yield. You can see it had been trending lower. This is a very clear downtrend. Now for the first time, well, here we've got single closes above the 21 but couldn't sustain it. So this is one of the key things we're going to be watching next week is can the 10-year stay above this 21 and get back above the 200-day moving average, which it broke below. But we're more interested in the slope of this line and where the TNX is relative to that line. So very clear that we've been in a downtrend in rates, but now We tried to go lower this week and couldn't go lower. Had the employment report, gapped up on that. Let's see if that gap sticks. XLI is up next. This is industrials. We're going to expect to see some strength in industrials if money flows back into cyclicals. You can see on a relative basis, not a lot of change over the last 3 weeks on them, but we are above the 21 and above the 50. These moving averages have been flat for 5-6 weeks here. The 8, the 21, and the 50 are all stacked up here. That's very frequently a launching pad for higher prices, so that'll be something we're keeping an eye on. Technology, look at the relative strength on this going back to the middle of May. Again, May 19th, here's that key day when we had a big gap down but closed at the high of the range, and tech has led ever since then. One touch of the 21, couple of approaches but not a touch, and a controlled pullback this week. Note on a relative strength basis, we've been flattening out here for about 3 weeks as a little bit of rotation has taken place. Consumer staples, terrible downtrend over the last 3 weeks. Trending sideways here, tried to break out of this base and go higher last week, but that failed. Now we're back into it, sitting on the 21, lack of relative strength on staples. Real estate continues to be fantastic. Big trend higher since the beginning of July, just riding this 21-day exponential moving average higher. Utilities, choppy as always. Strong trend up this week near the top of this range. See how that resolves next week. Healthcare has been strong. A little bit of a pullback late in the week as a rotation took place, but all we are is pulling back from an extended condition on the XLV, and finally XLY, consumer discretionary, tight sideways action, lack of relative strength, but this is mainly due to the overwhelming size of Amazon in this ETF. So that's where we are on overall on the 11 main sectors. Now let's get to the 21 over 21 list. And first of all, we want to talk about what got booted out this week. And there are 3 of them. The first one is Visa. Hard sell-off here early in the week. Not a lot of strength since their earnings report. In fact, the earnings report put a top in, bounced off the 50-day. 21-day has now rolled over and we closed under it, so that's gone. The hardest one hit is Revolve. Big gap down on earnings, but remember, if you've seen my gap class, sometimes these big gap downs get everybody out that wasn't a strong holder. And for now, this put in a bottom. It's not on the 21 over 21 list anymore, but it had a higher high. This gap down makes this an inflection point, and it made a higher high off of that. So that's bullish, although the chart seems to be broken for now. Reclaim the 50-day. 21 has rolled over. Not anything I'm interested in at this point, but something to keep an eye on, as this does have nice growth numbers, very obviously, but not a good reaction to their earnings report initially. But again, they did make a higher high. And the last one that got punted off, Apple looks fine, but Apple's almost its own industry group. I don't want to take up space in the 21 over 21 if there's plenty of other stocks that you can own. Apple is really just a decision whether you want to own it or not. It's in the telecom sector, but it's really a tech stock. It's also a consumer discretionary stock. It's something that, it's Apple. Let's not take up space with a big Nasdaq 100 name in there. We want to get things that are going to double outperform the market. Apple is really just a market stock and then a little bit more. But let's get to the 21 over 21 list now. We've actually got 23 because of some buying we did late in the week in software. Has been extremely strong. Let me display the whole list here. We've got 10 sectors and 17 different industry groups. If it's flagged, it means we own it. This 21 over 21 list is not just a token list. We put a lot of work into it, and we eat our own cooking, and we're very often fishing in this pond here. How many metaphors can I get out here today? Maybe about too many, but anyway. So let's start off with something we added late in the week, Datadog. You know I love big volume gap ups because it means Wall Street was offsides and the story has changed. So Datadog reported Thursday, huge numbers, nice earnings, and look at the earnings growth for next week or next year. 50% earnings growth. Yes, they've got a ridiculous PE. Tech stocks and growth stocks always have ridiculous PEs. It's not a reason not to own it. So big gap up and tried to sell off today, but closed just a fraction down. This is a great day too, considering that tech was being sold today and growth was being sold today on the news with the jobs report. This stock just looks fantastic. So now let's see what happens when the moving averages catch up to it. We do have a half size position in that. Zoom Info. Boy, what a week with this stock. So massive gap up on earnings. We bought the gap. It reversed. People in the know knew that they had an offering coming. After the market closed on Monday, they announced the offering. Traded down Tuesday morning, but didn't. The 55.25 was the offering price. It never touched it. The low in the day was 55.50. It started its move backwards Wednesday, followed through the upside on Thursday, and pulled back reasonably today. So we ended up we started with a 4% position here on the gap up, sold it down to 2 when we closed at the low of the day, bought half of that back when it recovered. We've got a half size in that 3%, and this just looks great. Good earnings, good reaction after the secondary. Again, let's see what happens when the moving averages catch up to price. Steel Dynamics, I mentioned we added this today. All of these steel stocks pretty much look alike. They formed a base. Several of them broke out and then had lower volume pullbacks from the breakout. And this is just a very low risk entry with money flowing into these type of stocks today. I'll be stopped out with just a very small loss if this doesn't work out. But I could also have had Nucor in here. I could have had NMT in here. I could have had CF in here. There's multiple ones to pick from, but when you see the same setup in multiple stocks in the same group, pay attention to the group. And I didn't want to go with SLX because the two leaders in there, the biggest percentage in SLX are Rio and Vale, and those charts are not as strong as the ones that I mentioned. So this looks good, and it's a good low risk entry. Zscaler. We noticed a couple of weeks ago that Zscaler was starting to outperform CrowdStrike that we had. We got stopped on CrowdStrike. Zscaler, we had a pullback and a bounce off the 21. Took a position in it. Reasonable pullback today. This looks good. Square, this is another one. Very excited about the way this is acting. They did an acquisition over the weekend, last weekend, and it initially gapped down in the morning trading Monday morning, but by the time the market opened, it recovered all those losses. They were like 5 to 6%, and then it just screamed higher. That saying, buy me, is a big stock, up 444% volume, up 10% that day. We took a position, bought it a couple times, it pulled back. 2 perfect pullback days contained within support and the ADMA. Took off again yesterday. We added another little piece to it. Came up to the top of this range and it pulled back on lower volume today. This is acting perfectly. I have high expectations for this as long as the market continues to cooperate with us. But Square's our biggest holding right now. AMD took off. I mean, this is just a perfect setup. I didn't buy it because we had NVIDIA. We've had a lot of discussion in-house about ignoring things because of I already own-ism, and we're actually trying to break that because there's no reason why we wouldn't have. Owning NVIDIA, and I mean this is hindsight talking, but owning NVIDIA is no reason to not own AMD when a stock acts like this. But maybe it's because the Reddit crowd got involved in it, but this is huge volume, breakout, 20% gain within 5 days. It was a nicely formed base, announced earnings, broke above the earnings. That's an inflection point. Broke above the day of the inflection point and of the cup and handle. I should have bought it. Is the bottom line. I don't own it. We put it in the 2121 list last week. Pulled back the last 2 days. Volume's kind of high, and it's still above the ADMA, so it's something that we're keeping an eye on. Lending Club, another earnings winner. Wall Street offsides, big volume. Up 48% on 1,659% volume. take a picture of this, print it out, post it next to your monitor. This is what we look for. Despite those numbers, you say, I can't buy a stock that's up 49%. Well, sure as hell were a lot of professionals on Wall Street buying it with that volume. And then what happened the 5 days after that? Perfect action. Just barely a blip below the close of the first day. And then higher highs, broke out again, and then low volume pullback. This thing is just acting perfectly. We have a very small position in this. I would like one higher, but it's got a 10% range because of the gap up. So as the daily range contracts, we can put bigger size on. But again, I've got high hopes for this one. Wall Street, not enough ownership of it. And let's see what happens when the ADMA catches up to price next week. Franco-Nevada. So gold stocks, GDX, just look like garbage. They had a gap up late last week, tried to break out Wednesday, and just an abysmal failure on that over the last 2 days. Despite that failure, Franco's still looking pretty good, but we did take off half of this position today because this is just really a failed breakout. It's held by the group. Also, they have earnings next week, so we really aren't going to hold a position with no gain into earnings. But this is a fantastic setup. Technically, it hasn't triggered an exit because it hasn't hit pivot minus 7%, and it did bounce off the 21 today. So it's got a lot of things going for it, but it doesn't have group strength going for it. Tried late last week, failed over the last couple of days, but we're sticking with a 0.5% position on this. Snapchat, another one with a big earnings report, 577% up 23%, and just a nice little flag into the ADMA, bounced off the ADMA, attempting to make higher highs. Volumes come down a little bit. Volatility has contracted. Another one that I've got. And again, if the market goes higher, this is a leader. But we do always, as always, have to be concerned about what the market's doing. Dynatrace, another one with a good reaction to earnings. In this case, a reaction was a pullback and a bounce off the 21. Not the best action the last couple of days, where it approached 20% above pivot and reversed twice, but it is holding the ADMA. I sold half of this to deploy into other things on this reversal because this is really an evening star 3-candle pattern, and it is holding the ADMA. I'm good holding a half position on this now, but I booked a double-digit profit on it, and I'm okay with that. Costco, accelerating to the upside. Incredible relative strength after this breakout. Picture perfect, trending above the ADMA, but no, we don't own it. ALB, this is the other one that's in the 2121 list. For various reasons, we don't own it. Pulled back after the breakout and then just took off like a rocket. You got your 20% there in about 3.5 weeks. Great reaction to earnings. Sometimes when a stock runs 20% and report earnings, it's a take profit situation, but not with ALB. Look at the relative strength on this, and all-time highs is a pretty good story. Carvana, big gap up on its earnings report, but then reversed and closed in the lower part of the day. So some people took profits on this, but it has run from 219 up to 372 in about less than 3 months. So you can't say it's not time to take some profits in it, but that's not the close, but it should hold the lows of today. CMG, this is another one, earnings and just screaming higher. I unfortunately got shaken out of it on these days here because I didn't want to go into earnings with no gain, unfortunately, and then I didn't buy it for various reasons. When it gapped up, thought it would pull back. No pullback, hasn't even touched the ADMA. So sometimes you just can't assume these big gap ups are going to pull back and give you a reasonable entry. This is one that has just completely continued higher, and the strongest stocks don't let you in. Remember that mantra. Lulu, another one that's been acting great for us, just continues to ride the ADMA higher. Our second biggest position. AVTR, no extreme strength. Okay reaction to earnings, bounced off the 21, just continues to chug higher along the 21. In mode, bounced off the 21, positive reaction to earnings, sideways over the last week and a half. We own this one too. Viva Systems just continues to just act great since its last earnings report. Pullback in the market. held the ADMA, tested the 21, and just continues higher. Net, so we sold part of this when we got a little bit extended here, knowing that earnings came up, bought it back today when it bounced off the 21. So this is our third biggest position, and held the 21 nicely, closed on the ADMA. All in all, for what started out as like a 5 or 6% gap down to close only down 2% is a win for net. DocuSign bounced off the 21. When it bounced off the 21, we took our position from a half back to a full, and this continues to act well. AMT, this is a REIT, losing some relative strength over the last couple of weeks, but still holding on by a thread to the 21. Let's see if it bounces off of there or if it goes higher, or if it breaks down. Sorry. Domino's Pizza, huge earnings winner, sideways action since then, holding the ADMA, and finally Fortinet with the big shakeout on earnings, and then just took off like a rocket higher. Great move on Fortinet. This has been in the 21 list seemingly forever. That's why it's got the number 1. These are numbered by the order of which they were put into the list. So that's going to wrap it. Actually, that's not going to wrap it because we haven't talked about buys and sells this week. So we came into the week, adjusted beta about 20% higher than the market, added Square on Monday, Tesla on Monday, took some DocuSign off, added Zscaler for CrowdStrike on Monday, added a little bit to Tesla, and took a little bit of that Tesla off today as we had 2 buys. The second buy was underwater, so we trimmed that a little bit. Let's take a look at Tesla. You can see what I'm talking about here. So here was the gap up on Monday when we bought it, continued higher. So we went from a 3 to a 4.5% size, just went sideways, sideways, sideways. And week close to the week, couldn't get above this tight range when it pulled back. I don't like to have, closing the week negative always gives me a bad taste in my mouth, so I just took a little bit of this off, and some of this was what was redeployed into the Steel Dynamics buy. We already talked about Square and how we added that. So then Tuesday was ZI. This was the ZI bizarre day where 2 buys, 1 sell, and then another buy later in the week. 3% size in ZI. Wednesday, we added ARK-K, and this was just really because of this fantastic setup. So bought it Wednesday, and then with all the other, we had some cash to deploy. And then when we deployed a bunch of it on Thursday with these gaps, we were a little bit over heavy, and I took the couple of percent profit in a couple of days on this ARK-K. This still looks fantastic, but we've got a lot of tech that overlaps with the top holdings in ARK-K. So took a small profit on it in a couple of days. So in and out this week on it. DocuSign, I talked about how we added to that. This brings us into Thursday. Thursday was the Datadog buy. Another add to Square. A buy of Roku. This is one that we're underwater on, and will be the first one to go next week. So when it reclaimed the 50-day moving average, we bought it. Note the 21 has rolled over. I would have expected it to close the week above the 50-day. It didn't. Small position size on this, lack of relative strength. Very often this puts in the bottom, and I was happy today when we broke above the high. Remember what we just looked at with that revolve that gap down, but what the way the market was treating growth today was just not enough for this stock to overcome that. Close near the lows of the day. This will be the first one punted next week if it continues to be weak. DT, I talked about how we took a little bit of that off on the double reverse off the attempt to make all-time highs. So also was some volume yesterday when that came in, and that was kind of out of the ordinary to see that high volume reversal. So I took a little bit of that off. And then today we added that position to net back. Took a little bit off Tesla, that as I mentioned. Took a little bit off Franco Nevada, as I mentioned, on this pullback because the second buy was underwater, and then we closed the day taking this position in Steel Dynamics. And those are the portfolio changes for the week. So going into next week with an adjusted beta of 70% higher in the market, so we're pretty heavy. We've got our stops in place. Downside is less than 5% if all stops get hit. We're feeling pretty good about the market, but if that changes, we're ready to change and turn on a dime. That's going to wrap it. As always, like to hear from you. I'm on Twitter at @DVandenbord. You can email don@revereasset.com or phone 855-REAL-WEALTH. Wrapping up the week ending 8/6, August 6th. This is Don Vandenbord reminding you that you'll never forget your small losses. You'll never forget your big losses. You won't remember the small ones, but you'll never forget the big ones. Thanks for listening and have a great weekend.